Globetrotters, and you're watching Vegas Sky. Who you with? Who you are? You with my brother and my sister.
Thursday, February 26th, and this is Taking Stock. I'm Remy Blair. In today's trading session, we saw mixed trading for the major U.S. stock averages. Ahead of the close, we are looking at the S&P 500 in negative territory, but for the Dow, as well as the Russell, as well as the New York Stock Exchange Composite Index, we are seeing green across the board. In today's trading session, it was all about NVIDIA earnings, and we saw NVIDIA pull the Dow Industrials lower. This did come amidst its blockbuster earnings beat. At the same time, NYSE listed Salesforce did manage to eke out a gain, up by 4%, leading the way higher. And of course, in today's Taking Stock, we will be talking to Jay Woods of Freedom Capital Management, and he will be telling us about Salesforce as well as what's moving amongst these major stock averages. So we are counting down to the closing bell right now, and AirCap will be doing the honors for the close. Take a look at the podium as we count down to the close of today's trading session. Well, U.S. markets are now officially closed on this Thursday afternoon. We are seeing a mixed close with the S&P 500 off by about half a percentage point. We are looking at the Dow eking out a small gain in today's trading session. Meanwhile, we're looking at the NYSE Composite Index closing higher, up by about a quarter of a percentage point, while the Russell 2000 Index is higher by about half a percent. Well, joining us now is Jay Woods, Chief Market Strategist at Freedom Capital Markets. Well, Jay, great to have you here. Thank you so much for joining me.
Yeah, what an interesting bell. I'm not a fan of that double ring. As a trader, we listen to that bell and we go, but they're excited, so
yeah,
we'll
absolutely, Jay.
Yep.
So first and foremost, a tale of two stocks, NVIDIA versus Salesforce. What's going on here?
Yeah, we had NVIDIA, great earnings, results were fantastic, traded up after hours, looked like it was breaking out, and then the momentum faded. Where did the momentum go? They went to bargain shop, Salesforce, Snowflake, and then Workday yesterday.
Yeah.
Not great quarters. These AI disruptive stocks in software have been under a lot of pressure. Investors are going to take a little more risk on and try to find bargains instead of go where, the safety is in NVIDIA. So this market is showing sentiment is much different than the fundamentals. So the technicians are winning right now if you're looking for a battle, which I always am. And we're seeing a rotation into some beaten down names. We saw Microsoft and Meta catch a bid too. Those two names under pressure. So rotation within the overall beaten down names, and then the overall market, what does it do? S&P 500 falls because of some of those mega caps. But Russell up again today. So rotation continues to be the theme, and we saw it on display today with NVIDIA.
Yeah, so you mentioned a key word there, Jay, and that is rotation. And on this Thursday afternoon, we're closing above that 6,900 level for the S&P 500. So what levels are you watching in the short term?
Well, 6,900 is just a magnet. We go below it, we get back there. We try to get to 7,000, we get sucked right back down to 6,900. What am I watching? That ceiling is 7,000. We know that. It's that floor that gets a little higher. It's the 100-day moving average around 68.30 now. We test it. Every time we tested it since last April, we've held. Will it break? Is NVIDIA going to go a little bit lower or consolidate again? I believe we'll consolidate again. Now we focus on Broadcom next week. It's baby brother, if you will. That stock under pressure held this 200-day moving average today. Let's see if this consolidation phase in the big tech names continues. That's not a bad thing. As they go sideways, the small caps rally. It won't bring us to new highs, but it's not going to break us down yet. So we're treading water right now, and sometimes that's not a bad thing.
Yeah, and you brought up the small cap Russell 2000.
Yeah.
That is something that we'll continue to watch. So, what do you expect to see from that index and why?
Yeah, well, the regional banks and the financials within that index have done very well. Regional banks under a little bit of pressure, but what we see is rotation. Healthcare stocks within that group have done extremely well. Overall, healthcare is where the next rotation goes. Utilities broke out, real estate, the REITs starting to break out, and now watch XLB, the healthcare ETF. We're seeing not the healthcare companies like UNH Humana do well. We're seeing the big pharma do well, the J&J Amgen. Now I'm seeing Pfizer come back to life. Bristol Myers breaking out. Smart, safer plays, good dividend. That's rotation into safety. Not what you want to see in a roaring bull market, but still bullish. We're still holding on near all-time highs, so not a bad thing. But NVIDIA couldn't break us out, and it may take a few more months before we see that 7,000 plus level again.
Yeah, and finally, Jay, before I let you go, you mentioned AI. We're all focused on artificial intelligence. So what do you make of the headlines we're seeing regarding disruption? Do you think it's overdone?
It's so ironic. AI bubble is being disrupted by what else? AI. Is it being overdone? I think we saw it in the software stocks. So when I look at software, I look at the IGV as the proxy. Some of these cyber names also a little oversold. Watch CrowdStrike next week. That's going to be an interesting tell. So as software now catches a bid, the hardware is getting hit a little bit. So more rotation just within the sector itself. I think we're going to be okay, but we're just not getting momentum in the sales of these software names over the long term. In fact, what we'll watch next, relief rally. This is a relief rally. Can it sustain? I don't think it's going to, but some things will change in the next few weeks, and maybe the narrative will change. We'll focus about Fed policy next. That's probably the next thing that will move this market.
Well, Jay, thank you so much for joining us on this Thursday, and thank you so much for weighing in on the latest earnings.
Thank you.
Well, that was Jay Woods of Freedom Capital Markets. And now I recently sat down with Sam Callahan of Orange BTC to discuss Bitcoin's performance so far in 2026. Take a look. Well, joining me here at the New York Stock Exchange to weigh in is Sam Callahan, Director of Bitcoin Strategy and Research at Orange BTC, the largest Bitcoin treasury in Latin America. Sam, great to have you here. Thank you so much for joining me.
Thanks for having me.
Well, it's been quite the start to 2026. So first and foremost, when we look at Bitcoin, what do you make of the price action we've seen so far, and where are we?
Well, I think it's pretty par for the course for Bitcoin. I mean, Bitcoin is a volatile asset. It trades about 45% annualized volatility. So we're down about 45 to 50% from the all-time highs. So this is pretty normal in terms of Bitcoin's price action. I think what's really happening is we had a lot of volatility, not just in Bitcoin, but in precious metals, silver, the Japanese bond market. And so you have these multi-strategy hedge funds that were maybe leveraged across assets. And then when silver goes down, Bitcoin is a highly liquid asset, trades 24/7, 365. If there's some kind of margin call elsewhere in these hedge funds book, they're going to have to sell something, and Bitcoin usually suffers in those environments. So Bitcoin is still viewed as like a risk-on asset, and that's changing over time. People like BlackRock are saying, hey, this is a asset that protects you against currency debasement and uncertainty, but that's still kind of getting sussed out by the market. It's still kind of digesting that as Bitcoin is a safe haven asset. So right now it's still a risk-on asset. But I think that's going to change over time.
Yeah, and you bring up an important point because when we're looking at the sell-off that we saw on February 6th for the crypto market, there are a lot of moving parts, and it's not just the crypto market, it's also other asset classes, including the equity markets as well as commodities, where we're seeing these massive moves. So for viewers out there who are trying to make sense of what we saw in the beginning of February as well as the beginning of October, what would you say to them? And if you do believe in the 4-year cycle, where are we?
Well, the 4-year cycle is related to Bitcoin's halving events that happen roughly every 4 years. I'm one of those Bitcoiners who feel like liquidity is mostly that drives Bitcoin. It's actually not the halving cycle. And so right now what we're seeing in the broader macro environment is we're seeing the central banks cut rates. We're seeing talk of a shrinking balance sheet, but the fact is that the balance sheet's expanding at the central bank. And so liquidity conditions are likely to improve here. But over the last, in October as well as February, what we saw is like deleveraging across this asset class. When you have leverage with a highly volatile asset, that creates risk. And so you can have these moments where the floor could seemingly drop out. But every single time that happens, you have convicted holders that come in who have been studying this asset, who see this as an opportunity. They like it at 126. They should really love it now. Bitcoin's on clearance because nothing's actually changed fundamentally with the asset, and nothing's changed with the value proposition, given the risks of currency debasement and more uncertainty in the global monetary system.
Yeah, and speaking of which, I understand that you're in the Latin America market, in particular Sao Paulo. So when we think about Latin America, we know that there's hyperinflation well as currency chaos. And here in the US, when we're talking about inflation, we're just talking about single digit increases, but not necessarily the case down south. So give us an idea of your perspective when it comes to macro.
Well, in Latin America, they have a lot of instability in their currency as well as their financial system broadly. Yeah, we at Orange BTC, we're trying to drive Bitcoin adoption in a region that needs it most, given that instability. Now, from a macro standpoint, Brazil specifically, I think emerging markets are a really interesting place to be right now because Trump and Bessent have communicated to the market they want a weaker dollar, and it's about their policy goals to reshore the industrial base, make our export economy more competitive. That's really beneficial for emerging market economies like Brazil. And so I expect Brazil, you're already seeing a lot of flows kind of come into Brazil, Brazilian equities, which are very cheap right now from a valuation standpoint. And so I think Brazil specifically has really interesting characteristics when it comes to the broader macro in a persistent inflationary environment, in an environment where natural resources and raw materials are being repriced higher. Brazil has the second largest rare earth reserves in the world. And so when we talk about these bigger policy goals for the Trump administration, Brazil's kind of sitting there right in their backyard. And I think you're going to see improved trade relations and you're going to see benefits from the market in that region.
Well, Sam, we will have to leave it there, but thank you so much for joining me.
Do you, Remy?
Well, time now for a few fintech, crypto, and AI headlines. Well, Wednesday's risk-on rally for the crypto majors stalling today with Bitcoin down 0.5%, ETH down about 1%, and Solana off about 1.5%. Next up, a new report from the Pew Research Center finds that 12% of U.S. teens are using AI chatbots for emotional support or advice, even as mental health experts warn these general-purpose tools are not designed to replace human connection. And finally, OpenAI COO Brad Lightcap says that the rollout of ads on ChatGPT's free tiers will be an iterative process with the company focused on user trust and privacy. This does come as it tests high-priced ad formats amid growing competition with rivals like Anthropic. And joining us now on Taking Stock is Olivia Vanderwood, tokenization lead at Avalabs. Olivia, great to have you here. So first, when people talk about crypto, they tend to obsess over daily price swings. So do you think the real signal is the plumbing and not the actual ticker?
Yeah, absolutely. Thank you for having me. First of all, fintech and crypto are increasingly converging, and in my view, the market is missing it. The institutions are building out the custody infrastructure, the tokenization pipelines, as well as the on-chain settlement rails, and they're making multi-year capital allocation decisions completely decoupled from daily price movements. And really, the build out is accelerating in drawdowns, not despite them. And that distinction really matters. And the market, of course, has misread structural shifts before, Remy. The market laughed at Vanguard's first index fund, and it went on to fundamentally rewire how capital gets allocated globally. And the same dynamic is unfolding today in the context of tokenization. While attention stays very much fixed on token prices, stable coins, as well as tokenization and blockchain technology writ large, are dismantling the frictions of legacy finance. They're delivering near instant settlement, reduced counterparty risk, and 24/7 availability across real growing user bases. And the scale is really undeniable. We saw Cash App, Gusto, Deal, JP Morgan all launching USDC products last quarter. Meta, as of this week, is reportedly building stablecoin payments products across 3 billion users. Tokenized assets have surged to 25 billion in value on chain. Just last week, Dragonfly raised 650 million, oversubscribed in a down market. And on LP conviction, really around stablecoins and fintech convergence as opposed to Bitcoin's price. So really the reason that capital keeps flowing here, regardless of price, is simple. Blockchain-based infrastructure is better financial infrastructure. programmable money, instant settlement, and embedded compliance really can't be retrofitted onto legacy rails easily. They require a financial system rebuilt for how money moves today.
Yeah, and Olivia, you just mentioned stablecoins, so I do want to ask you about adoption we're seeing in this space. So do you think crypto, the term crypto, is really just a label for modern fintech?
Great question. Really, if you think about tokenization, it's actually quite boring technology. And tokenization, though it may be boring in principle, is really quite exciting in how it can improve fintechs. The addressable market for tokenized assets is really hundreds of millions of retail and SME users in dollar constrained markets who have never had access to US Treasury yields or institutional grade financial products. When the peso depreciates 20 to 30% in a year, dollar denominated yield isn't a convenience so much as a core value proposition. And reaching these users at scale has been a decades long challenge that traditional financial infrastructure really couldn't solve. But tokenization solves the unit economics that made it impossible. The business outcome, in my view, for fintechs is threefold. It's novel revenue streams, a product suite that competes with what's been gated behind private banking minimums, and lower operational costs by embedding compliance controls directly into a token. And this is already happening and has been happening for quite some time now. In 2024, Colombian neobank Lidio, for example, processed over $100 million across 300,000 users in Colombia. And this is all being made scalable today by blockchain-based platforms like OpenTrade and Denari, which offer stablecoin yield products and tokenized US equities infrastructure distributed through APIs. And really, the blockchain enabled financial products are creating new revenue streams for fintechs, scalable distribution for asset managers, and access to institutional grade yield and equity for end users inside fintech apps that they already know and trust.
Well, Olivia, we will have to leave it there for today, but thank you so much for joining us, and thank you so much for sharing all of your insights.
Thank you so much for having me.
And that was Olivia Vanderwood, tokenization lead at App Labs. Don't go anywhere, much more Taking Stock right after this. And joining me on the floor of the New York Stock Exchange is Jim Neeson, Managing Partner at Connor Group. Jim, great to have you here. Thank you so much for joining us.
Remy, thank you so much. It's a pleasure.
Well, we are counting down to the 13th IPO Summit right here at the New York Stock Exchange. So give us a little bit of insight into the IPO market this year.
Yeah, absolutely. I mean, we are seeing a very bullish market. we're predicting 375 to 400 IPOs, 20% growth over last year. And we're even seeing sort of those signals already in January and February. We've had 66 IPOs so far, 38% increase from the exact same time last year. And even as we look at sort of this IPO summit, a lot of excitement and preparation getting ready for 26 and 27.
Yeah, hard to believe, but already we are edging closer to the second quarter of 2026. You mentioned January, February. What have we seen so far?
Yeah, I think we've seen a combination of things. Number one, some really good transactions, specifically at the New York Stock Exchange. We've seen Once Upon a Farm, Forgin, Veridynamics, as well as Bob's Discount. All of those are trading 20% above their initial IPO price. 16 of the 66 IPOs are what I would call sort of that traditional bucket. We've seen the SPAC market also very aggressive. 45 deals have already gone out. And what's been really nice is companies have been able to both price, but sort of then have that aftermarket performance. So I think you're seeing a lot of them, especially now we'll have a little bit of lull in February. Companies are getting their numbers freshened up for the end of the year, but we're going to see a big push into March, April, and May.
Yeah, and Jim, speaking of which, I do want to ask you about the outlook as well as the current pipeline. So what does all of this tell you about the market health?
Yeah, what we're seeing is there is a very substantial pipeline. We talked about the 1,600 unicorns, 800 in the US, but if you even look at this IPO summit that's coming up this week, I mean, we have 119 unicorn companies who are part of our 600 executives worth over $680 billion. And these are companies that are specifically targeting 12 to 24 months to look to get out in the markets. What I really like too is you see broad industry representation. You see everything from IT to healthcare, financial services, B2B, B2C, as well as energy and materials. So a broad cross-section of industries, companies getting ready for this next 12 to 24 months.
Yeah, and speaking of which, there are several mega IPOs that all of us are keeping our eyes on, namely SpaceX, OpenAI, Anthropic, Databricks, as well as Stripe. So what can we actually expect here in terms of timeline?
Yeah, what's interesting is each one of them will have a timeline. They're going to be raising a very substantial amount of money, right? It could be in the billions of dollars each. So I think a lot of it is really finding those long-term investors as they do sort of their testing the waters, as they start talking to sort of institutional investors as well. A lot of them too have very deep cash reserves as private companies. So I think we're going to see that they're going to be opportunistic, they're going to want to time it properly, but these are companies that could absolutely transform both the technology and the economic landscape for the next decade.
And speaking about the landscape, would you say an IPO is akin to the Super Bowl?
Yeah, I definitely would. I mean, for so many companies, this is a marquee transaction. It brings the locker room together. People remember it for their entire careers, but it also for employees and investors and even sort of the customers, this is a big deal. This shows that these companies are sort of at the elite forefront of their industry. We see companies that are preparing a long time, but when it happens, it is pure magic.
Well, Jim, always great talking to you. Thank you so much for joining us here on the floor at the New York Stock Exchange.
Let me thank you so much.
Thank you very much. And that was Jim Neeson, Managing Partner at Connor Group. After the break, the latest from Money 2020's Chief Strategy Officer. Don't go away. Welcome back. Today in startups, raises and rounds. First, UK-based autonomous driving startup Wave is raising $1.2 billion from backers including NVIDIA, Uber, and major automakers. This values the company at $8.6 billion as it pushes to commercialize its map-free end-to-end AI driving software. And next up, AI chip startup Max has raised $500 million in a Series B round to build processors it claims could outperform NVIDIA in training large language models. It does plan to begin shipping its TSMC manufactured chips in 2017. And finally, agentic AI from Basis is raising $100 million at a $1.15 billion valuation. This as investors bet its autonomous accounting agents can help ease the industry's talent shortage and also boost productivity. And now Money 2020's Scarlett Sieber is back with Jargon Translator, putting fintech terminology into language anyone can understand. Take a look.
Welcome back. I am Scarlett Sieber from Money 2020, and this is Jargon Translator, where we make sense of the techie terms that keep popping up in your crypto feed. Today's word, layer 2. Sounds like a skincare routine, and I love me a skincare routine, but it's actually how blockchains level up. So here's the tea. Blockchains like Ethereum are amazing, but they're slow and expensive when traffic spikes. Enter layer 2 solutions. Think of layer 2 as the express lane on a crowded highway. Instead of every car or transactions jamming the main road, layer 2 handles the overflow, processes transactions off-chain, and then settles them back on the main blockchain. It's like saying, hey Ethereum, you keep being the backbone, we'll handle the chaos. Why does this matter? Because gas fees on Ethereum can feel like rent in Manhattan. Layer 2 solutions slash those costs and speed things up. Suddenly, buying an NFT doesn't require a second mortgage, and people have done it. Go ahead and check me. How does this work? There are different flavors. Roll-ups, they bundle transactions together and post them to Ethereum in one neat package. Think Costco for crypto transactions. State channels, like opening a private tab with your friend for multiple transactions, then settling the bill later. Sidechains, independent blockchains that connect back to Ethereum for security reasons. And here is the kicker. Layer 2 isn't just about saving money, it's about making decentralized apps usable at scale. Gaming, DeFi, NFTs, they all need speed and affordability to really go mainstream. That's the biggest criticism right now. Without Layer 2, Ethereum would be stuck in traffic forever. And we all hate those traffic jams. Of course, it is not perfect. Nothing is perfect. Security depends on how well these solutions interact with Layer 1. Bugs, exploits, and bridge hacks, still a thing, but the innovation is wild and billions are flowing into Layer 2 projects because everyone knows scalability is the name of the game and the name of longevity. So next time you hear Layer 2, don't think skincare, think blockchain's glow up moment. Layer 2, because even blockchains need a fast pass to keep the vibes moving. And that is your Jargon Translated.
Well, here at Taking Stock, we are counting down to Friday's trading session, which will be the final one for the month of February. On Thursday, we saw the major U.S. stock averages close mixed, with the S&P 500 ending in negative territory, but the Dow eking out a small gain, while the NYSE Composite Index as well as the Russell managing to eke out a gain. We saw CRM, Salesforce, which is a NYSE-listed company, gain by about 4%, but NVIDIA earnings took the spotlight. Although the blockbuster earnings beat estimates and so did its guidance, we saw the stock, NVIDIA, fall by about 5% in the trading session. And on Friday morning, we are looking ahead to key economic data, including producer prices, in tomorrow's trading session. And that'll do it for the show. We will catch you tomorrow on Taking Stock. Woo!